For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Warren Buffett, the legendary investor and chairman of Berkshire Hathaway, recently released his annual letter to shareholders, offering a wealth of insights on various topics. In this highly anticipated letter, he touched on everything from the importance of acknowledging mistakes to his indifference toward prestigious academic credentials. While his wisdom on these subjects is always valuable, one of the most striking takeaways from this year's letter was his response to those who speculated about the significance of his company's record-breaking cash reserves. As market valuations continue to climb, some analysts and investors assumed that Buffett's growing cash position signaled a bearish outlook. However, he took the opportunity to clarify his stance and reaffirm his long-term confidence in United States equities. Over the past year, Berkshire Hathaway sold more stocks than it acquired, pushing its cash holdings to an unprecedented level of $334.2 billion. This has led to widespread speculation regarding Buffett's investment strategy and whether he is bracing for an impending market downturn. Despite these concerns, Buffett made it clear that his faith in the American economy remains steadfast. While some financial commentators viewed Berkshire's substantial cash position as a sign of caution, Buffett emphasized that the overwhelming majority of the company's funds remain invested in equities. He reiterated that this preference will not change, reassuring investors that his bullish outlook on the market remains intact. Beyond its well-known stock portfolio, which includes major holdings in American Express, Coca-Cola, and Kraft Heinz, Berkshire Hathaway also operates numerous privately held subsidiary businesses spanning various industries. These include insurance, utilities, manufacturing, and retail, among others. Unlike retail investors who can only access publicly traded stocks, Buffett has the advantage of investing directly in these non-public companies, which he has done extensively. He noted in his letter that while Berkshire's holdings in publicly traded equities declined from $354 billion to $272 billion last year, the value of its privately controlled businesses increased. In fact, the worth of these non-public assets now far exceeds that of the marketable equity portfolio, reflecting a strategic shift in how Buffett is allocating capital. This approach appears to be delivering strong results as Berkshire's operating earnings surged over 70%, reaching an impressive $14.5 billion. While Buffett's overall strategy remains focused on long-term value creation, his recent stock transactions have drawn considerable attention. One of the most notable moves has been his gradual reduction in Apple holdings. Over the first 3 quarters of last year, Berkshire Hathaway sold an astonishing 605 million shares of the technology giant. Despite this massive sale, Buffett still maintains a substantial position in Apple, holding a stake valued at $75.1 billion. Although this divestment raised questions among investors, Buffett's history suggests that his selling decisions are often driven by valuation concerns rather than a lack of confidence in a company's long-term prospects. Apple was not the only stock affected by Buffett's wave of selling in 2024. Berkshire Hathaway also significantly reduced its stake in Bank of America, shedding 352 million shares. This represented a decline of 34% in Buffett's position, signaling a shift in his portfolio allocation. While he has been reducing exposure to certain high-profile companies, Buffett has also been actively buying shares in other businesses. In addition to investing further in Berkshire Hathaway's privately held subsidiaries, he has increased his holdings in several publicly traded firms. Notably, the conglomerate expanded its investments in Domino's Pizza, Constellation Brands, and SiriusXM Holdings during the final quarter of 2024. Furthermore, Buffett's letter revealed his growing interest in international markets, particularly in Japan. He disclosed that he has been increasing his investments in 5 major Japanese trading companies: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. These firms play a crucial role in global commerce, and Buffett's decision to boost his stakes in them suggests that he sees significant long-term value in their operations. This move aligns with his broader strategy of investing in well-established businesses with strong fundamentals and attractive valuations. While Buffett's investment moves have dominated headlines, the broader stock market has also been experiencing notable shifts. Nike, a company not typically known for dramatic stock movements, saw its shares surge by nearly 5% after analysts at Jefferies identified it as a promising turnaround opportunity. This optimistic assessment sparked renewed investor interest in the struggling footwear giant, which has faced challenges in recent quarters. Meanwhile, Jefferies analysts also provided a bullish outlook on Freshpet, a retailer specializing in premium pet food. They projected that the company's stock could rise by 50% over the course of the year, a prediction that led to an immediate increase of over 7% in its share price. Similarly, Sweetgreen, a fast casual restaurant chain known for its fresh and healthy offerings, saw its stock climb nearly 4% in anticipation of its upcoming earnings report. On the other hand, not all companies enjoyed positive momentum. MicroCloud Hologram and MicroAlgo, two firms involved in quantum computing, saw their share prices plummet by over 21% and 28% respectively. These declines followed a period of rapid gains late last week, highlighting the volatility in this emerging sector. Another company facing challenges was Palantir Technologies, which saw its stock drop by more than 10%. The decline came amid reports of potential cuts to the United States defense budget, a development that could negatively impact Palantir's government contracts. Similarly, Alibaba experienced a sharp drop in its stock price, falling by over 10% after announcing a massive investment of $52 billion into artificial intelligence and cloud infrastructure over the next 3 years. Meanwhile, Rivian Automotive suffered an even more dramatic decline, with its stock plummeting 79%. This significant drop followed a downgrade from Bank of America analysts, who expressed concerns about the uncertain demand for electric vehicles. Even Domino's Pizza, despite being a favorite among investors in recent years, faced disappointment. Its stock slipped nearly 1.5% after its latest earnings results failed to meet expectations. As investors await the release of a key inflation report at the end of the week, another economic metric has gained increasing attention: initial jobless claims. This report tracks the number of Americans filing for unemployment benefits each week. While it is typically just one component of labor market analysis, its importance has grown due to discussions about potential federal workforce reductions. Economists estimate that upcoming government job cuts could result in 300,000 layoffs in the near future. However, according to Apollo's chief economist Torsten Schluck, the actual impact could be much more significant. He explained that for every federal employee, there are typically 2 contractors whose jobs may also be affected. As a result, the total number of job losses could be closer to 1 million, which could have serious consequences for the broader economy. In addition to concerns about job cuts, the cryptocurrency sector recently faced a major crisis. Crypto exchange Bybit suffered the largest hack in history when cybercriminals stole $1.5 billion during an internal transfer of funds. This unprecedented security breach led to panic among investors, triggering a $4 billion withdrawal rush. Despite the setback, Bybit's chief executive officer Ben Zhou assured users that the company remains financially stable and that all losses will be covered. However, the incident has once again raised concerns about the security and regulation of digital assets. In response to such issues, the Securities and Exchange Commission has formed a new cryptocurrency task force aimed at addressing these challenges. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.